Well, I think you've seen a big run up in Bitcoin prices over the course of this year so far. So it's been a spectacularly performing asset class so far this year. And I think a lot of the enthusiasm was predicated on the idea that the Fed, at some stage in the not too distant future, was going to stop increasing interest rates and actually reverse and start decreasing them. And that's very, very favorable for sort of inflation assets or anti-inflation assets like Bitcoin and gold and things like that. What we saw last week was basically, I think, quite the opposite happening. First of all, we saw the inflation numbers were starting to tick up slightly again. Much of the decreases we've seen in inflation are basically lower energy prices, lower gas prices, lower crude oil prices. Those have largely reversed now. So, of course, the past month and a half, we've seen crude oil prices come up quite a bit. And that's eventually going to get reflected in the inflation numbers. So inflation is going to carry on ticking up slightly, I think, in the coming months. And that is going to put pressure on the Fed to carry on increasing interest rates. And we saw the Fed minutes come out last week as well, where we saw some of the thinking of the members of the Board of Governors of the Fed who basically said, yeah, we're going to have to carry on tightening. So the bias, I think, at the Fed right now is more tightening rather than less. And that is going to be becoming clearer and clearer and put pressure on Bitcoin prices in the coming weeks and months, I think.